In yesterday's video, we were looking for a bounce, which we got, but unfortunately, we also sold off. What caused this sell-off? If you were following the charts, you already knew that this was coming. And I mentioned exactly what you needed to look at in yesterday's video. I'll go through this in more depth. Let's run the numbers. It's vitally important to know the structure of the charts that you're dealing with, also intercorrelation and interdependence. Bitcoin's chart does not move independently of the rest of the market. Now, what caused Bitcoin to come down like this? Let's have a quick look. I mentioned in yesterday's video that it was really important to keep your eye on the futures. For example, the S&P 500 futures, the Nasdaq, the Dow, and the Russell. What we saw was indeed that bounce, but when the futures started to decay and when the major market indices opened, we saw a straight down sell. We can see that we're now actually trading below the 200 period moving average on the daily basis. Inside the S&P 500, it is very common to get retests, so just please be aware. And we've also seen a lot of downside negativity. Retail will be going nuts at this stage and saying everything will be heading towards zero. One thing to note is what these upsurges in the S&P 500 did previously to the crypto market. They basically turned double-digit red into double-digit green. So please be aware, when the S&P 500 retraces, it's going to be glorious across the crypto market. But you must be aware of your structure. We saw the DXY absolutely sell down recently, but it's starting to base. It's starting to find substantial support. Remember, we talked about this in previous videos. There is so much structural support around these levels, the DXY had no choice. But that wasn't the consensus on the street. The consensus was the DXY was going to just decay, go to zero, as is the general way of retail. But we saw something completely different. Because there's so much structure here, the DXY is starting to turn around. Every chart is structurally bound, and recently we saw gold reject this level of structural overhead resistance at that 2930 mark. It couldn't maintain the 2903 mark, so therefore, where is the next level of structure? It's down at 2854. Always remember, price is always moving in a wave. It's always going up and down. But when you get structural cuts, they're things that you must pay attention to. If we don't turn bullish and retrace up to this 2903, we're heading down to 2854. The question becomes, what do we need to keep our eye on? Definitely the futures of the major market indices in the US. Please make sure that you're looking at them. If they start to recover, if they start to come up, that's fantastic for risk-on behavior. But if they keep on decaying, that's not so good. If we get a decay, expect Bitcoin to be moving with it. And of course, your cryptos will move more wildly. We know recently that Bitcoin broke down on a level of key structural support, and when it broke down quite wildly. It did have that bounce as we anticipated, but Bitcoin cannot escape the major market indices. It will move in that directional correlation with them. That's exactly why we got this downtrend. The thing to remember at this particular stage is where Bitcoin and crypto is going long term. In the future, there's absolutely no question that Bitcoin will overtake gold in terms of market capitalization. This is a big increase to go from $1.56 trillion up to around 20 trillion, but it will happen. And when that happens, you can look back and say, oh, I got out because the prices were going red. Or you can say, I leaned in because the prices were going red. Please let me know what you're doing inside the comments. Unfortunately, the problem is that people who are new to financial markets, and we just call those people retail, They've been sold on a story that prices only go up. They don't even do that. They just go up, or maybe just like this. And when they go down a little bit, people think that they're going towards zero. Financial markets are treated like casinos, and unfortunately at the casino, the house always wins. Inside financial markets, intercorrelation, interconnection, and mindset are incredibly important. You have to know where structure will play out inside price action. Are we coming up to a level of structure and therefore going to get negative structural attraction to the level below, or vice versa? Are we going to get positive structural attraction to the level of resistance above? Literally, we need to turn panic into opportunity. When we get a discount, that's terrific. That's what we're after. We don't want to pay top dollar for something. We want to get it at a discount. But retail always wants to pay more than they should. So the key is, please do not be retail. Don't get caught up in all the stories. The truth is, when there's extreme fear inside the markets, this is the ultimate time to get in, not out. Of course, if you watch the mainstream media news, and I call it main scream media, they'll just be screaming, "Oh, panic, 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 you need to get out." Your emotions are not your friend inside financial markets. In fact, having emotional control is absolutely vital. The key problem is, most people go all in at one particular point. For example, if they're buying something at this point, they go all in with their account, and if the price goes down, they're absolutely not expecting it. We know that price is always moving in a wave, so we anticipate we can get in and we layer positions down. We don't go all in and more at one position, because that's akin to literally going all in a hand of cards or at the casino. We don't do that. The question is, why did the main markets retrace? The culprit who's been driving the bus of risk has not changed. It's the VIX. You can get my watch list from CTKSMethod.org. It's very important to have a look across the row 1, row 2, all the way down to row 7. Now, what are we seeing here? The VIX is without question driving financial markets at the current time. It's created negative sentiment across not only row 2, but look at the major indices. A 4% decrease inside the NASDAQ Composite Index. What about the row 2 or row 3 references? They're all negative. This means that the risk that is exploding inside financial markets, and I'll just show you how much is exploding. The VIX is coming up and up and up. What does this mean? It's going to go one of two ways. It's going to retrace and decay, or it's going to continue to go up. But this is already incredibly overextended. If you think back to the S&P 500 and how it's progressing at the current time, you've seen it's just going down and down and down. The sentiment inside the markets is incredibly negative. This is where we buy. And I've been saying that 2025 will be the year of the trader. You must be able to trade in this year. Therefore, what you would seek to do is to have an investment bag and a trading bag. Investing is all about when this is occurring, when you're getting these big spikes up inside the VIX, you really want to accumulate what you want to keep long term. And if the price is going down and down and down, that is fantastic. You're getting a discount. You want it to go down if you're an actual investor. If you're a retail investor, you're an emotional trader. You're probably seeing lots of memes about roller coasters and people destroying their computer equipment and all sorts of things. But the truth is, if you're a real investor, you're looking for spikes like this because they can make you millions. The fact that the VIX is coming up is not a problem to us, it's an advantage. When we see double-digit negative, that is an incredible opportunity to not only invest but also to trade. In other words, retail is absolutely terrified of the red. A professional trader is really excited by volatility, and of course a professional investor as well. Let's do a bit of a thought experiment. Here you can see Bitcoin coming up and up and up and then violating that 200 period moving average. What happened next? Of course, people would just automatically assume we're coming down into this area. Now, why have I got rid of the dates and the prices? Because I need to show you the concept. It's very important to understand. People would just automatically assume we're coming into these areas. After all, we lost the 200 EMA. Well, so that means we're coming down into lower structural areas. Well, is that the case? Let's have a look at what happened. We played around and did an undersigned retest, and then we started to gather strength and momentum. And what happened? Ping, we go up. And then we're back right down again to below where we were. But does it keep on going down? No, it doesn't. It's just hovering around that 200 period moving average. And then what do we see? Hang on a second. That's not supposed to happen. What's all that about? Of course, this is all about shorts getting absolutely certain that the market is going to come down. The shorts getting certain that the market will come down is exactly what is required to push the market upwards. Now, where are we at the current time? We're kind of in that same kind of scenario. Oh, we're going to come down around here. Are we? Are you sure about that? Don't forget, when everybody is absolutely certain the way the market is going, it goes in the opposite direction. So please keep this in mind. I wanted to show it to you because I think it's so important to understand. Here we can see that even though we violated the 200 period moving average, like it's kind of a sin or something, it doesn't mean anything because price is always moving up and down, up and down. This is what I anticipated 2025 would be like. If you do not know how to trade, you're going to have a very stressful time. And don't forget, you can make money in any market. It doesn't matter if the market is coming up or going down, it doesn't matter. We go long at spot in all markets. And please make sure that you revisit especially the mindset components of the profiting course. It's very important. Also, please make sure that you understand how all the charts are intercorrelated and interconnected. When you can predict the tops and the bottoms across all of these cheat sheet tasks, because they literally are tasks, you've got to know if the S&P 500 is either topping or bottoming. All charts are intercorrelated and interconnected. And just make sure that you can look through the charts. Yesterday, when we said the markets were likely to bounce, they did bounce. But we knew also that we had to look at the major market index futures. As they were decaying, they pulled Bitcoin down with it. This is absolutely understandable. Certain actions. The way that you get certainty from financial markets is simply to understand how the markets move and how they intercorrelate and interconnect. Also, just please bear in mind, market permission is incredibly important. The important thing to just keep in your mind, do not enter trades based on emotion, because when things go green, people are likely to buy, and when things go red, people are likely to sell. If you're buying here and selling here, it doesn't take too much to figure out. If you keep on doing it, your account will get cut to shreds. The key is do not act emotionally. Now, if you're not acting emotionally, how should you act? Well, you act with a knowledge of structure. For example, we knew that at the 81,866, we had a level, and a fairly strong level, of structural support. So as we came back and retested this, we also had these levels of structural resistance above. If we could get through those and maintain a positive course, and we couldn't get through them, these are structural failures combined with a cut under and a slicing of this key 81,866 level. That created negative structural attraction down to the 79,501 level. And this 79,501 is a really important level. We must get above it to push bullish price momentum and a recovery. If we do so and remember the level of fear and greed inside the stock market, it's really low, 15. That is an ideal time to buy. Inside the crypto market, it's 20, and also an ideal time to buy. Why? Because so many shorts are entering. They're licking their lips and just saying, oh, it's a done deal. It's certain. Ooh, be careful of that word. Something that you may like to think about. If something was certain, why on earth would there be a return? A certainty is a 0% return. 100% certainty, 0% profit. Highly uncertain, that's completely different. So you can see that the certainty is just about where the structural level is and how price is reacting to it. Is it reinforcing it or is it cutting it? This is the key. And always remember, price is always moving in a wave-based function. For the profiting students, just remember your gravitational wells or GWs. We also need to zoom into the price action on total crypto market cap to understand where that's going from a structural perspective. And we can see, unlike Bitcoin, we've got above a level of structural support. And we can see that Bitcoin is seeking to get above this 79,501 area. So this all in all is quite positive at the current time. This is an ideal time to get into the market if you're not already. And BORSOG, which is buy on red and sell on green. Another thing with retail trade perfection or RTP, retail is always chasing 100x gains, never realizing the effect of turning over small percentages frequently to get way more than 100x. One thing to bear in mind, we're still dealing with this level of total structural resistance. So total crypto market cap getting above this area is really quite important as well. As is keeping in mind what's happening with the index futures. The markets are tremendously oversold. They're very, very negative. And what the institutions do at this stage is go in the actual opposite direction of where retail thinks the markets are headed. It will do so about 90% of the time. When you're looking through your charts, please make sure that you know where the structure is, how strong it is, how clustered it is. For example, XRP has tremendously good structure underpinning it at the current time. Understanding the relativity of structure between different charts is very important. For example, if we're looking at Solana, how's Solana structure looking at the current time? We can see it's fairly indispersed and we've got a negative CTKS gap. So what it means, if Bitcoin loses its structure, if it doesn't get above structural resistance, Solana could get hit and move back to the 112. But if Bitcoin keeps on going up, and you can see there's some degree of weakness at the current time, this 118.10 cent mark is really important for Solana to maintain and bounce from. You have absolute certainty ahead of time as to where the key levels are inside each of the cheat sheet price charts, and that's what's important. You need that certainty, because if you can't get above a level of structure, and we saw that 130.83 level to be quite an important level, it's just going to come down because that's the way that it goes. If you can't get above, you're going to the level below. If you cut through it, it's in all likelihood because of market conditions. For example, we know that this sell down was caused by the decay of the S&P 500, the Nasdaq, the Dow, and the Russell. A lot of people inside the Solana ecosystem will only look at the Solana chart and never understand that Bitcoin and total influence that chart, but Bitcoin is influenced by the major market indexes. The cost of not knowing is incredibly high. If you're inside the market, you will get pullbacks from time to time. They allow you to think differently and not take the market for granted, to seek out the market's permission. And when you do these things, you will find that the next rally you get will take you to levels that you weren't at previously, just like in life. Your purpose in life is to always get stronger. You will have pullbacks in life. They are inevitable. But the concept is growing in strength and kindness, empathy and care. A lot of people think life is just a competitive struggle. How can you compete against other unique people? You've already won the race. Nobody can be you like you can. And you can't be other people either, just be you. Therefore, there is no competition. Always remember that all results come from the mind, and a better mind creates better outcomes. The way to get better outcomes is simply to get better habits, and through better habits you will get a better life. And the universe wants you to succeed. So always remember that life pullbacks will give you the strength for the next life rally. Staying dedicated and committed, understanding that you either win or learn, and we never blame, because when we blame, we disempower ourselves. We are responsible for the results that we get from life. We are not children, we're mature, we're adults. Therefore, understanding that the universe wants us to succeed and opportunities in life reset daily, we can just dust ourselves off and get back into the boxing ring. You're an absolute legend for making it to this part of the video. To let me know that you made it, please put something into the comments about winning or learning. It's just such an important thing to do. And you might even like to put something about life pullbacks. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.